the silver rally right now is driven not by speculation, but I would argue this systemic short squeeze, because you have record high lease rate. So it really means that London basically virtually has no free silver to meet rising investor demand and or back the billions of ounces in outstanding contracts. And with the lease rates at that level, it's basically the risk of a delivery default in London is rising. And that is the point where I do believe that what you just said is true, that there are traders that smell blood in the water with silver, and it is being pushed up because of the falling open interest, more by short squeezing than by anything else.
Andy Schectman, CEO of Miles Franklin, is sending out one of his most urgent warnings yet. The silver market is flashing red, and what's coming next could change everything. This isn't just a price rally fueled by speculators. According to Schectman, we're witnessing a full-blown systemic short squeeze. Silver lease rates have exploded to all-time highs, open interest is falling, and physical delivery demands are off the charts. The perfect storm that puts extreme pressure on the system. London, the heart of the global silver trade, is now practically running on empty. They're trading 600 million ounces of silver every day, but there's barely 140 million ounces of freely available silver left to back over 1 billion ounces of paper claims. That's a massive imbalance, and it's creating real risk of a delivery default. Traders smell blood in the water, and the squeeze is getting tighter by the day. But this story gets bigger. The U.S. government has just designated silver as a strategic mineral, effectively putting a government-backed price floor under it. This isn't just a commodity anymore. It's a resource of national importance. Tech giants like Tesla, along with government agencies, are rushing to lock in supply, going head-to-head with investors who are also demanding physical metal. Meanwhile, China and other major players are buying silver as if the future depends on it, because it does. They're refining, stockpiling, and even paying premiums for unrefined silver, playing a long game to secure industrial dominance. Schectman believes these converging forces, industrial demand, sovereign accumulation, and relentless investor buying, are driving us toward a historic revaluation of silver. The market is approaching a point where physical demand will overwhelm supply, forcing prices much higher and potentially triggering triple-digit silver. For investors, this is no longer just about owning some silver. This is about holding a strategic asset that's tied to energy security, technological progress, and the coming reset in global finance. Those who understand what's happening now could be perfectly positioned when the world wakes up to the shortage. Now, let's dive into Andy's interview clips and break down what this means for you in real time. And before we get started, hit that subscribe button and turn on the bell icon so you never miss these critical updates as the silver story unfolds.
I think that is an incredibly intuitive question that you've asked.
Well, thank you.
So, yeah, because let's talk about that for a moment. Speculators, after months of little bit of liquidation in the gold market, where the speculators were taking profits and gold kind of just chopped sideways, they are returning with massive open interest rising again in the futures market. What open interest means is people are coming in to buy more open interest. They're buying more contracts, and prices breaking out again as we see it nearing 27 or 3,700. This is the normal link between purchasing and higher prices. Okay, to your point, and you're the first person who I've talked to in a while that's got, and that is that the silver rally right now is driven not by speculation, but I would argue this systemic short squeeze, because you have record high lease rates, you have falling open interest, meaning the speculators the hedge funds aren't buying. You have massive delivery demands, 58 million ounces since late August, 10,550 tons year to date. This points to a shrinking physical liquidity and mounting pressure on the market in London. London shows that they're trading 600 million ounces of silver a day, representing between 1 and 2 billion paper ounces claims 1 and 2 billion, and they have 140 million ounce free float backing that 1 to 2 billion claims and 600 million ounces a day. So it really means that London basically virtually has no free silver to meet rising investor demand and or back the billions of ounces in outstanding contracts. And with the lease rates at that level, it's basically the risk of a delivery default in London is rising. And that is the point where I do believe that what you just said is true, that there are traders that smell blood in the water with silver, and it is being pushed up because of the falling open interest, more by short squeezing than by anything else. And silver is something called a Giffen good, or Giffen good means that as prices rise, demand increases. That's kind of abnormal in investing, but it makes shortages even worse, because as the price rises, you'll get the industrials that say, man, we need to just jump on this now, like Tesla, because we need, so much silver and the price keeps going. Let's just jump in.
Right. They got to lock it in as a hedge. Yeah.
Yes. And so, really, 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 really good question. And I would say gold's open interest is massive. That's the central bank. Silver open interest is falling a little bit, but the price keeps rising. That's a short. When you will see investor demand and industrial needs collide, the market will face, I think, that moment where there is a battle between the hedge funds and the industrial, which will massively add fuel to the fire, because the realization will be that that's exactly what is happening. And when you see the amount of silver coming in the first week of the September contract, as an example, we saw literally almost well over $2 billion worth of silver delivered into COMEX in just the first couple of days of this last week in the September contract. And again, what did I say? How much has come in so far this month? It was so far this month, the first week, because I didn't get the numbers yet for this week, 52 million ounces were delivered on COMEX of silver. So 52 times, your $2 billion right there. So that's just 1 week with 3 weeks worth of data left. This is every month. So someone or some entity with a whole heck of a lot of money is saying, yeah, we want the physical. We don't want your paper promises anymore for these reasons. Now, is it an industrial? Is it a government entity? Is it an invest? So is it someone that needs it, like Tesla or Panasonic or Sony or whatever? Or is it someone who says, you know what, we're going to stockpile this? See, the U.S. government got rid of its strategic stockpile ages ago, and they've always had to go into the open market to buy silver, even to make silver eagles. So I think it's a realization that in the end, it's about having the tools, as you mentioned, to further your society. China's realized that for a long time. They play the long game, and they've been buying this stuff but they've been producing gold and silver even when it was uneconomical for years, using their trade imbalance, because they understand in the end, he who has not just the gold and silver, but all of the things. That's why China bought the LME, the London Metals Exchange, all the base metals. They own it, and they're warehousing these metals. They're building warehouses all throughout China that store the metals on the LME. That's why the whole premise of the Belt Road Initiative is partnering with countries that are resource rich and underdeveloped. We will develop your country. We will build the infrastructure. We get a piece of what comes out of the ground. And now we're making it so you can go back and forth on not only on transactions using the bridge technology, which is being rolled out to them, which settles in 7 seconds outside of the SWIFT at a 98% reduction in fees. You can settle imbalances in gold, or you can take your gold that you pull out of the ground all throughout Africa. You can put it into a vault that will soon be in all of the countries around the Belt Road as collateral for renminbi-based loan, like a repo. And so we are getting to a point where gold and silver and commodities are becoming far more important than the paper that has been used to purchase them and to value them for a very long time. The folks in other parts of the world see this clearly. The insiders here, I think, now see it. When will that trickle down to you and I and the rest of us? Don't know. I mean, people watching your show probably have a better idea, but the people who we call friends and family, who are very well read and very intelligent, arguably just read the wrong stuff. And they are being misled and misdirected with the public, who's all in on margin, all in on leverage, on options, and all in stocks as the insiders go this way and gobble up physical assets. It's classic misdirection. It's the art of war. They're winning. Thank God someone in this administration, in my estimation anyway, clued in this President Trump and this administration to the importance of getting on the bandwagon.
The precious metals market is undergoing a seismic shift, and Andy Schectman says this cycle is nothing like the ones we've seen before. The big wave of public selling is long gone. Most retail holders who wanted outsold years ago. What's left now is a market driven by institutional buyers and central banks, and that changes everything. For the first time in U.S. history, America has become a net importer of metals, a signal that the tide has turned. Meanwhile, gold is quietly being hardwired into the architecture of a new financial system being built outside the Western sphere. Think about gold-backed repo facilities tied to the Shanghai Metals Exchange, including a new one in Saudi Arabia, which will allow gold to function as collateral, reshaping global liquidity flows and reducing reliance on the dollar system. Schectman points out that short-term price swings in gold and silver are just noise compared to the big picture. The fundamentals are stronger than ever. The U.S. government's move to classify silver as a strategic mineral is a game changer, effectively creating a price floor and locking in silver's importance not just as an investment, but as a vital industrial resource. And the timing couldn't be more critical. Mounting government debt, currency debasement, and growing economic uncertainty worldwide are driving investors back into hard assets. Gold and silver aren't just hedges anymore. They're becoming the backbone of a new global financial order. For those looking to capture the upside, Schectman notes that mining stocks can deliver massive leveraged returns in a bull cycle, but they come with volatility. Smart investors, he says, will balance physical metal holdings with carefully chosen mining equities, using proper risk management to ride what could be one of the most powerful commodity supercycles of our lifetime.
The United States being a net importer of metal has never happened. An administration who continues to drop clues and hints that gold and silver are certainly, whether it be reclassified as a strategic mineral or the comments, Trump, he who has the gold makes the rules, Besant being a self-proclaimed gold bug. We've talked about Judy Shelton, or Senator Lummis, all of the things about gold revaluation. The Federal Reserve just wrote a report on it. Everything that's happening with the BRICS, and this is something that should not be overlooked, and they are massively tied to gold. The fact that now the rumor about everything I was talking about with the expansion of the Shanghai Metals Exchange and the settling in gold outside of the trading in local currencies over Enbridge, they're now talking about, the rumor is they will have a gold-denominated repo facility that will be part of the Shanghai Metals Exchange, where you will take gold and use it as collateral with metal held in the Shanghai Metals Exchange and in the series of vaults that are now being built all around the Belt Road. The next one is being built right now in Saudi Arabia, which is very symbolic, but using it as a repo facility for renminbi-based loans where, all of a sudden the Chinese and the Belt Road Initiative, who are trying to help build this ecosystem amongst all of these underdeveloped countries, will take gold as collateral for loan. For repo, is typically associated with giving liquidity to the worldwide market by exchanging treasuries for cash and then being able to buy them back at a later date at a higher price. If you can now switch that to gold, my point is that I truly believe we are just getting started. I truly believe with the passage of the Genius Act and the passage of a synthetic demand for U.S. treasuries, we have entered a new monetary system, and gold will be part of it. Silver will follow. Should you take profits? Sure, it's not a four-letter word. You certainly could. Would I personally? No, not yet, because I've never seen a market that behaves quite like this one does, with the fundamentals that are growing at the highest levels. And I guess what I would simply say is that when like I said, the people running the money printers are buying gold, the central banks, you should pay attention. When the most sophisticated institutional traders in this country go from net sellers to net buyers, you better pay attention, and it's just beginning. And then when the U.S. government comes in and says silver's now a strategic mineral, that's just a floor been put underneath the price of silver by the U.S. government. And the massive imports coming into the United States, I would argue there's a floor under the price of gold. Ultimately, I think gold will be tied to a new system, a new monetary system. It will be definitely tied to one in the global south, and I think it will be tied to the treasury market here, a floor underneath the price of gold. So in my mind, this time is different. There's nothing wrong with taking a profit. It means you've won. But I would say that I think you'll look back at it. Look, let me put it this way. Goldman Sachs just came out and said if the market even thinks the Fed loses any bit of its independence, you'll see gold at 5,000 like that. Does anyone really believe the Fed is independent anymore? With Stephen Miran, the architect of the Mar-a-Lago Accord, now being put into the Fed, and the pressure that Trump is giving, and all of a sudden they talk about bending to 25% or 50% drop tomorrow, the Fed has lost its independence, which is nothing new, by the way. You go back through history, the Fed and the president have been intertwined more than you would think. They're telling you gold's going to go higher. And you look at a guy like Luke Gromen, who's as smart as anyone in this industry, he said, yeah, they're going to let gold go much higher slowly, organically, before they revalue it. So let's look at it from a standpoint of price set, which is really, I think, part of the bigger picture to reach real price discovery. When you have a market where price is discovered, for example, in London and or in the United States, this is the problem, I think, in that the LBMA and to a degree also the COMEX have been setting prices for the entire world that have been massively rehypothecated. In other words, they sell the same paper over and over again, fearing or realizing that no one ever stands for delivery until they now are standing for delivery. And so when you see all of these exchanges being set up around the world, in Moscow, in St. Petersburg, in Shanghai, in Hong Kong, in Saudi Arabia, in Singapore, all around the world. These are exchanges where the people not only have been accumulating tremendous amounts, but they're the ones who understand it a lot better. These are mostly cash and carry markets. Ultimately, I could see a point where the LBMA is on the ropes. And I mean, I really do believe that the LBMA is on the ropes right now in many respects. I mean, there was just an article by a guy named Daniel Gali, senior commodity strategist at TD Securities, warning investors that silver appears to be entering the endgame of the current cycle as demand, now driven by renewed investor interest, eats away at the last dregs of above-ground supply. In an interview with Kitco News, Gali said the free-floating stockpiles in the vaults of the London bullion market could run dry within 7 months if investment demand picks up. They actually only have about 1 day's worth of trading in silver right there. That's it. They have 140 million ounces of silver in London, yet they're trading over 600 million ounces a day. They have 1 to 2 billion in paper claims, ounces, 1 to 2 billion ounces of paper claims standing against 140 million ounces of silver. All of that metal has come back to the United States, and we were supposed to believe that it was under the auspice of tariffs. No, I said from day one, this has nothing to do with tariffs. They're reshoring it. The LBMA is on the ropes right now, and in other words, price discovery has been a function of suppression by the West. I think there will come a point a few years from now where the price setting is done in the East, and the COMEX and the LBMA are rendered not the primary price-setting mechanisms of the world. You could see a combination of both pushing gold and silver substantially higher. And if gold is pegged to a new system, which I believe it will, whether it be treasury market here or backing a new settlement system in China and the BRICS nations, there's a floor underneath that too. And so, yeah, I mean, I think it's both, really, and maybe equally.
If the pressure building in the silver market keeps intensifying, we could be looking at a historic price revaluation. Physical demand is now colliding head-on with a shrinking supply base, and the paper market simply doesn't have the inventory to cover it. A sustained short squeeze on top of record-tight inventories could trigger delivery failures, forcing prices dramatically higher as buyers scramble to secure whatever silver is left. Governments and major corporations are already treating silver like a strategic resource, effectively creating a permanent floor under prices. This means the days of cheap silver are likely over. Instead, we're entering an era where higher prices become the new normal. With global industrial demand booming, from solar panels to electric vehicles, and nations racing to lock down stockpiles, silver's dual identity as both money and a critical industrial metal could fuel a prolonged supercycle. In such a scenario, we wouldn't just see a spike. We'd see a sustained, elevated price level that redefines silver's role in the modern economy. So, what do you think? Are we on the verge of triple-digit silver, or will the paper markets manage to keep a lid on prices a little longer? Let me know your thoughts in the comments. I read every one. If you found this analysis valuable, make sure to like this video, subscribe, and turn on notifications so you never miss our real-time updates on gold, silver, and the global reset playing out before our eyes. Thanks for watching, and I'll see you in the next video.